Hello, everyone. Welcome to my 2 cents. With cottage season quickly approaching, I thought it'd be a great opportunity to discuss the family cottage and look at what some of the options are when thinking about passing on the cottage either to a family member or through the estate. Now, when a cottage is owned by an individual on their death, the cottage will be dealt with through the deceased estate. On the date of the death, it will be deemed to have been sold, giving the dramatic increase in cottage values. There can be significant tax implications. Income tax is payable on the increase in the value of the property, which is calculated as follows. Capital gain equals value minus the cost of the property. Now, costs can include any improvements, for example, a new boathouse or a dock. 50% of the gain is taxable. If the property is gifted to a family member or sold for less than the market value, it is deemed to have been sold for its fair market value, and the tax consequences will be as if you sold it for its current market value. Principal residence. You may be able to claim your cottage as principal residence. However, you are only able to claim one property as the principal residence for the same years of ownership. Estate administration tax. Estate administration tax is payable when probating your will and accounts for 1.5% of the total value of your estate. Probate tax can be avoided if the property is jointly owned with rights of survivorship. Assuming the cottage cannot be considered principal residence, there are a number of ways that you can protect the asset from any potential tax hit. Joint ownership. Joint ownership will help to avoid probate tax, but will not help around any capital gains liabilities. There is a tax disposition at the time the children become joint owners. In addition, the parents would lose full control of the property during their lifetime. In the unfortunate event that there is a marital breakdown with any of the joint owners, the property could be subject to division of assets. Use of a corporation. This strategy really only makes sense if you are also renting out your property and generating revenue. The downside with holding it within a corp is that you now lose the ability to claim it as principal residence. The family trust. The use of an inter vivos trust can also be considered as a strategy. A family trust will not have to file taxes, assuming there is no trust income. Rules for shared use methods for splitting expenses can all be set when you're creating the trust. If a person were 65 years or older, the cottage could be rolled into an alter ego trust. Now, this would allow them to continue using the asset with full control, deferring the capital until the death, and finally avoiding probate tax on the cottage as well. Transferring ownership through selling to beneficiary while living. Parents can also decide to sell the property to their children while alive. Of course, this would avoid probate. You do have to pay capital gains, but if planned properly, you may be able to spread the gains over over 5 tax years, reducing the impact. Also, if desired, parents can forgive the mortgage in their wills, therefore leaving the cottage to the children with no debt or any additional taxes. Life insurance. Life insurance can be used as a solution to fund the tax bill. A permanent joint last to die policy with an increasing face value to match the value of the cottage. Upon the final death, the insurance policy would pay most, if not all, of the tax bill. By naming the children as beneficiaries, the proceeds would pass outside of the estate and probate taxes and will be gifted to the children tax-free as well. In conclusion, as you can see, there are many options for keeping the cottage in the family for future generations to enjoy. Considering both emotional and financial aspects of transferring or gifting the cottage to your children will go a long way. Of course, each and every family situation is unique, So if you would like to discuss any of this further, I'd be more than happy to help. As always, please do reach out to your estate lawyer and your accountant as always. Take care and enjoy your summer.